Let's talk about the currency market today. It has been a very choppy day for the rupee. On your screens has closed on a very flat note, just a paisa of a movement coming in there. We did see its lows also today because of the strength in the US dollar. There has been weakness in the regional equity markets, and all of that really put pressure on the currency. Let's take it to the experts then, and Upasana Bhardwaj, economist, and Jeevesha Bank also joins us on the segment. Upasana, hi, welcome. How have you seen the rupee treatment in 2014? Because after the kind of decline we saw previous year, we just seem to be repeating ourselves, of course, except with the narrower band there.
Yes, Manisha, I think we are in for some amount of weakness, but of course it will not be to the extent that we have seen last year. I believe that the impact of gradual dollar strength on account of QE tapering beginning, that has to definitely do the catching up on INR. If you compare INR to most of the other EM currencies, INR has yet some kind of catching up to do. So yes, the kind of volatility that we've seen last year, it may not be to that extent, but definitely I do expect some kind of further weakness to persist for a while.
Upasana, what also is your sense about the funds allocation? Because that is something that always keeps the market jittery. Apart from, of course, the Fed tapering, that is something most of these emerging markets are taking in right now.
Yes, I think typically the first quarter of any calendar year tends to be slightly favorable for most of the emerging markets because you do tend to see a fair amount of flows come in. But if you were to look at the December FII flows, traditionally we do not see December inflows as significant as what we saw last year. So probably we will not see the extent to which Q1 normally would have seen the kind of inflows. We will have to wait and watch because the impact of QE tapering has still to gradually settle into the markets.
Also, Upasana, what's your sense on the domestic data that we are awaiting right now? 10th of Jan will get you the IIP numbers, mid-Jan will get you the inflation numbers, and of course the month is ending with the RBI policy review as well. How are you getting into all of these readings?
Well, I think primarily RBI would be focusing on the CPI and the WPI numbers, and within inflation also it will be more about core CPI. So I think we all kind of are aware that the headline numbers on the inflation front would be fairly positive because we have seen sharp downside in the vegetable prices. But more focused RBI is on the core inflation numbers, particularly the core CPI number. So I think we'll have to very closely watch that number to have a sense of how RBI would react to those numbers going into the last week of January. But at the moment how it looks like is I would see RBI pause for a while before it actually launches on to a hike further if required.
Vijay, getting you the conversation as well, as Upasana was making a point about inflation, and especially with the petrol diesel price hike, how much of that are you factoring into the Indian rupee, and what's your sense on the currency moving forward?
Manisha, I remain of the view that the appreciation potential for the rupee is fairly limited. And on the flip side, should the USD INR in the prompt month futures go past the 63.30 levels, today I have seen a close of 62.5575. So given another 75 or 80 naya paisa of an appreciation, I think the bears on the USD INR will be squeezed, and the rally in the dollar, US dollar, will accelerate. At that point in time, I'm looking at 65 plus levels on the USD. It may not naturally occur in the next one or two trading sessions. It'll take its own time in doing maybe a couple of weeks. But I don't see the USD INR appreciating beyond the 61.50 or 61.40 in the absolute near term.
Fair point. Upasana, one question to you, and this is about the global markets really. It was in December that we saw a turnaround coming in for euro as well. There has been some strengthening for dollar index too. Would you say that it was positions being cleared ahead of 2013 end, or do you see some criteria in that?
To an extent, I would agree. Also, I think if you were to look at the pattern which euro moved towards the year end, Of course, you can explain that through a current account surplus that took place in Europe. But apart from that, I think one more reason for euro strength was also that their year-end annual review of the banking system that was to take place, and that's where, in an attempt to show a clean balance sheet, I would say most of the funds were getting returned and hence providing support to euro. Now, to an extent, I think that that support does not exist anymore. And apart from that, I do see some kind of a downside to euro because inflation would continue to remain a problem, and ECB on probably Thursday's meeting will be at least providing some direction in terms of further loose policy if required. So I think there is a possibility of euro seeing further downside.
Vijay, a final question to you as well. What's your sense now with the dollar index? Because 81 is still a resistance. We are just capped between that 80-81 mark for now.
Absolutely right, Manisha. The next round of the upthrust in the USD index will come only above the 81.20 level. So 81.20 is something of a glass ceiling that I would watch out for. But the depreciation potential is also limited to 80.25 to 80.40.